Hello, this is Caujuan Mayo, co-owner of Binary Trade Signal, BTS. We're going to do some trading today, and I want to show you guys, my system, what I use, how I predict, my trades, and what I feel the trades are going to do, and what price is going to do, and how I come up with, you know, what I do and the reasons behind it. So basically, we're going to jump right in. We're going to start taking some trades, and then I'm going to explain, the reason why I took those trades. I'm going to show you exactly my system and what I use, which is price action. Really, no indicators. I know you see a lot of stuff on this chart right here, but basically, these are just price lines. Um, and these are just the price lines of, as you see where price is touched. This came down, touched, and prior, and so we draw a line, and then when price comes back to touch there again, then there's a high probability chance that it's going to do what it did prior to before, which is reverse. So as you see right here, price that came down and then it went up. That would have been a nice 2 minute trade. When price came up here and then it went up, that would have been a great 2 minute trade. Price came down here, touched, that would have been another one. So the concept is when it comes back down to touch this price line again, then we're going to take another 2 minute call, because as you see, prior to all the other 3 or 4 times it did just that. So that's what we're going to do. So we're just waiting, patiently waiting for price to come down, touch our support line. As soon as it touches our support line, we're going to go in for a 2 minute call. I'm already set up over here. I'll reset up on it again so you can see. So we're in the Euro USD, taking a 2 minute call. Now, right now, you see the price is going up now. So what happened is, let's say price comes up and it touches right here, which is 10823. Well, basically, this is a resistance line. This is a weak resistance, and this is a stronger resistance. And up here is a very, very strong resistance, as you see I drew. So if it touches any one of these three, I can go in for a put. Now right here would be a lower. Now right here would be a lower put, but up here would be a high put. If it was to come up here, I would jump right in. This is where I would wager more money on. The one right here, I would wager maybe less, or maybe not even take it and just wait for it to cross the yellow. If it don't, then I just miss out. Because as you see, more times in the past, it crossed the yellow. So right here, it crossed, it came down, you'd have won. Up here, it crossed, it came down, you'd have won. But up here, it crossed the yellow significantly. And maybe if you took just a 60-second, you'd have lost. If you took 2 minutes, you still would have won, because if you see 2 minutes later, it was below. But if you took just 60 seconds, which is why we don't take 60 seconds, because it's a lot more risky, then you'd have lost. So so that's why it's good to sometimes wait for the higher probability trades, which would be your higher probability resistance and support lines. Okay, we're getting close to this support line again, so I'm gonna set up for a call. Euro USD. See, it's real close. So if it touch, we're gonna go in. As soon as it touch, it's closed. Okay. So I'm in. Now there goes. See, now you see how I crossed my support line and it touched another support line. Okay. So that's another high probability trade. Now some will call this stacking trades. That's not stacking trades. If I would have came in and took another trade right here, it's not so much stacking. It's the fact that I know that this is a higher support line. So by that being a higher support line, if it comes back there and touch, yes, we're going to take that trade. So we're going to set up for that right now. Actually, it comes back and touch that green support line. We're going to come in and take this. Okay, there it is. So I'm in. So currently we're in two trades, as you see. So we got the first one down here, which we just jumped in, and we got this one down here that we're out the money. I'm not worried. This should go well below above the support line, as you see it just did, and now we're both in the money for both of these trades. But we still got some time to go, so we're gonna wait. Okay, this one shouldn't have been a grade, so that means I got in late right here, which your brokers will do at times. This is why we stress trying to get the best strike rate, and by getting the best strike rate, what I mean by that is waiting for it to maybe come below your support and resistance lines. And when you do that, you're getting yourself a higher probability strike rate. But if it's a strong support line, like you see here, it came here a few different times and it did the same thing, which was went in the opposite direction, then you can wait as soon as it hits and then just go ahead and go in. So it's a judgment call. But as you can see, we're still in the money on this trade. We have about a minute left and about 11 seconds left on this one. Okay, so this one we're good. This was the only one that was a little sketchy for us a little bit. This one we're well in the money because as you see, we took it when it came down and touched the green. So like I said, these are high probability trades. To some it may come across as stacking, but it's not. These are high probability. Right now, if it comes back down, touch again, I'm gonna take it. I'm gonna take another call. So I'm gonna set up for it right now for another call. Now that I made 200. I'm gonna compound, and this should give me a nice profit that I'm looking for. I want you to notice my balance right now 556, but when we take this trade right here, this should be the one. You see, just you took 2 minute trade from here, deep in the money. Okay, here we go. So we're waiting for it to touch. That's why we don't jump in early. As you see, price went up and down. Even though it had an up arrow, it did go up, but price can easily reverse and then give you a false signal. So you don't want to do that. You want to wait for it to actually touch support. This is considered support. Up here, this is considered resistance. Your bottom support line support, your top is resistance. So we're just waiting for it to touch our support line right here. I compounded this one because I've already won 2 trades that were for 100. So I compounded. Actually, okay, yeah. Actually, this one be considered compounding only because when you lose 100%, but when you win, you see right now it's only paying out 71 and 70%. So that means we only gained 70. So in all actuality, we're not really compounding right now. I mean, we're compounding because we scaled up, but I wouldn't call it compounding. I would call this scaling up. So basically, we scaled up. That way, we're not just wagering the same amount. When you wager the same amount, then your trades start taking on a roller coaster effect where you win, lose, win, lose, win, lose. Well, what happens is that's what your money do. It goes up, it goes down, it goes up, it goes down. But if you take some of these calculated risk, which means knowing the right time to scale up, then it'll alleviate that. So now when you finally do accumulate your first loss, you're well beyond that 70% profit from your last trade. So since your last trade put you well beyond 71, 70%, you lose this next trade, even losing 100%, you don't lose all your money, and you're still have a significant amount for profit. Okay, so I'm still watching. Okay, so we're going about to set up, getting ready. I may let it cross. I may let it cross because we see came down, so I may try to get a better strike rate. Might not. I'll see how I feel about it when I see it come down and touch where price is at, where it's at, what kind of candle it is. We'll see. Because sometimes it might just touch real fast like this and then jump and run away, and then you miss out on a good trade. So it's definitely a judgment call on whether you want to jump in right when price touch or if you want to wait to see if you can get a better price after it crosses the red line. So we'll see. Okay, we're close. All right, here we go. Oh, hurry up, hurry up, hurry up. Come on, come on, come on, come on, come on. Sorry about that, but at least we're getting a better strike rate. Euro USD, quick, Euro USD, call, and apply. And we got the best strike rate anyways, as you can see right here. So that worked out perfect for us. What didn't work out perfect was this much. We just waited though. There we go. But I'm gonna still look at the first strike rate I gave. So I want them both to win. So if that first one don't win, I'm gonna treat this as a loss, um, because I would have gotten at that first one still, and I'm gonna be, keep it real nice. But as you see though, this is what I mean by getting a better strike rate. Sometimes if you get a better strike rate, wait till it comes down, then it could mean all the difference of being well in the money and being out of the money. So I'm still confident. We got lots of time for this trade right here to develop. So I'm still confident that it would be deep, or not deep, but in the money by the time it closes. But if it don't, this one was only $5. Thank God. So this is the one that counts, and so far so good. There we go. That's what we was looking for. Let me tell you why this happened. As you see right here, the price came down and it touched. Actually, it broke our support line. Now it's never broke the support line, as you see, for a while now, for quite some time. So when it broke the support line, that tells me that it was going to go up. This was our strike rate, okay, 659, but 6.4 and even 6.39 was a much better strike rate. So once it came down here to 6.39, you definitely should have took it. Like right now, I would jump in for another trade. And it's not because I'm stacking trades, but it's because now we are well below. It came back and touched again. Now, what happened the last time it came down this far? It went up, didn't it? Okay, so that tells me that if price comes back down here and touches this support line again, then chances is it's going to go up. So if it comes down here and touch, I'm going to take a call. Okay, and as you see, we're well in the money. So that first one, there you go, one. Expired positions. Let's see if that other one won. The $5. Okay, we lost the $5. Remember, I told you now I would keep it 100, but I would have jumped back in for the Marty. And even though we lost that five, I would have jumped back in right here and took another trade like I did, which we did and won. And then when it came back down here and touched again, we take another trade as you did, as you see. And also we're gonna set up again. Okay, now we'll jump my price back down to a reasonable 50 or 100 now that we've already won a couple trades. This is how I compound, or how I scale. Okay, now I'm about to get ready for another call play. It's touching. Here we go. I'm comfortable right there. I want you to remember my account balance. 100,000. We've already made a profit already, but we're gonna bring this up. I'm gonna bring this up to over 600. So oh, look it, we got another nice price, so we're gonna come in right here. Look it, because now it's below. Now, one or two things. It's either gonna form a new support, which is right here, and this would be the new support line, or it's gonna honor this support line and go up. So we're gonna see. Again, this would be a judgment call you would make. It's already touched two times and went up, so I can say it's going to go in. This would be what I consider a low probability price action. This one right here is a high probability. If it comes down here, I would double up or put more money on it because it's a higher probability. Why? Because if you notice when it came down here before, price significantly went back up. It came down here before, price significantly went back up. Okay, so let's see where we're at. We're currently out the money in this one, in the money here. So we just need this one to develop. We're still looking good, as you see right here. This is my price action, and we're pretty much like right up under it. So there it goes. That was the big move that we was looking for. We should be in the money with both of these now. Excellent. Okay, now as you see, it's significantly rising. So that's why I'm not concerned about the one loss right there. Where's it at? Okay. So that one validated. That's a win. This one look like it's gonna be a win if it holds up. As you see, it came down, it went up, it came down, it went up, just like it was supposed to. Make it real simple, guys. I like to take binary options and simplify it. Yes, it's a lot you can know about the market. It's a lot you can know about analyzing. It's not you know about, of course, you don't need to know about news. Like you know about yelling. It's a lot of different things that you can learn and know about. Meet the market maker. All these different things. But guess what? We can just simplify it also. Look at what price done previously. Draw your lines. Wait for price to go there and touch again. Go on reverse when it does. How much simpler is it? Can we get than that? And as you see, we started off with a 100,500 and something. I don't remember the exact number, but as you can see, we've made over $200 profit in less than what's 8:56. So we've done this in less than 30 minutes, less than 15 minutes actually, right? And you know, just that simple. Just that fast, just that quick. It's touching again. I can even jump in for another trade right now if I want to. Now I can come in for 100, set up for the call. Look, if it comes down to touch my price, my line again, I'm gonna get in. I could have got in right here when it touched, but I was just a little bit late on the draw. But if it comes back down to touch again, I'm definitely gonna jump in. As you see, this would have been another great win for us. As soon as it touched, jumped in. Look at all green. So that would have been another great win for us. Look at that. Okay, so now we're gonna go do some back testing, and I'm gonna go over exactly what I just did, and I'm just gonna show you just how effective that this really is. So let's go back and let's go see some trades. Okay. Okay. So as you can see, when the first price action line, when the first line got drawn, which is right here. Okay. Now the way you get your lines is what you're gonna look for is you're looking for price to touch. As you see, price came down, touch right here, went away, came down, touch right here. As long as price touches 2 times, then you can consider that a good support line. Same thing with resistance. You see price came up, it touched once, it came up, it touched again. That's a good resistance line. What you're looking for is the highest and the lowest points. So you're looking for price to come up to its highest and its lowest points. You can also make support resistance lines within support resistance lines, which is called channels. That's this right here. Let's say I would use this as a support line, and I would draw one right here, even right more so right here. See? So every time price came up, it touched. If it came down, touched up here, it came down, touched, it came down, touched, it came down. So I can use this channel as a support, as a resistance line. And then when it breaks, then I wait and I see what it's gonna do. You see it leveled out, and then it climbed, and then it didn't quite touch. It's okay, but knowing what I know, I could have went in for a put once I saw it start to go down. But if you want to if you want to keep things high probability, then don't take that and just wait. It came down, and then once it touched your support line right here, you came in and you won. Okay, and then it came down again, and then you went in and you won. Okay, then it went up and it touched again and you won. So let's see how many trades that would have been for us so far. So let's wait. So let's go. We came right here. That's one trade in the money. Okay, waited. It came down. One, two. Depending on where you got in on this trade, it could have been you could have won because you could have came in right here. But we're gonna say it's a loss. So we're gonna say I'm gonna count this as a loss. So I'm gonna say this is one. Actually, we got more. I didn't count this channel. So we got one here, two, it touched right here, three, touched right here, and it's way down here, four, touched right here, five, came down here, touched. We lost our first one, so we're 5-1. Okay. Then we broke and we waited. Okay. Then it came down. 5-1 and touched and 1-6, touched 1-7, touched 1-8, touched, won 9, touched, and then lost. So now we're 9-2. So look at what it took for us to get to 9-2, just that fast. And if you look, we can back test this, and it's all day. See, money come up, come down 2 minutes later. Now, if you take it for 5 minutes, it's even more of a high probability. You got an even better chance. Come up 1, 2, 3, 4, 5. You're deep in the money later. So, guys, I hope this helped you out. I have other price action videos on my page that you guys can check out. Check out our binary trade signal YouTube channel if you're not already currently on our channel watching our videos, and you can get a clear understanding of price action and what it means and why I use it. As you notice, what I just showed you had nothing to do with nothing down here. Yeah, I have indicators down here, RS, SMI, and some other things that I really pay hardly any attention to. Really, it's just to give me some extra confirmation, just to let me know that I'm kind of on the right page, like I'm on the right track. But really, this isn't what I go by. I go by this right here. Price touches, see, touch right here, and it's out of here. Okay, that's what I go by. Looks like price is about to set up again. So that's what I go by, and this is how I take my trades, and this is how I win. This is how I stay in profit. I just did it in real time. You see, I just grew my account over $200, even with the losses. You see, the losses wasn't significant enough to matter. It still kept me deep in profit, and still with me taking the same type of trades and just scaling up. Once you win a couple trades, after you win 2 trades, scale up. If you lose, then come back down. So I hope this was understand. I hope this was made perfect sense. I hope you understood this. Be on the lookout for more videos to come. Again, this is Caujuan Mayo, co-owner of BTS Binary Trade Signal. Thank you for trading with us. Come again and have a blessed day.